We're here for the IMS July update. So July was a strong month of equity returns in particular, with lots going on under the bonnet. So we've got John here to talk us through, so why don't you give us a quick update, John?
Yes, the key development in July was the successful passage through Congress of Trump's so-called One Big Beautiful Bill Act, which provides a significant amount of fiscal policy stimulus to the US economy. So that was a key positive, I think, that markets took away. And the second one was the idea that the Federal Reserve could become a bit more politicised. Now that might be a bad thing, but in the current environment where the market would like to see lower rates, the idea of having lower interest rates under a different regime at the Fed, I think has certainly resonated with investors.
Yeah, and we've spoken for some time about both fiscal and monetary policy driving strong nominal growth over the medium term, and I think that's helped to support our overweight position to equities. And really helped us to kind of take advantage of some of the strong returns that we've seen in July. But those returns were quite concentrated, particularly in the US market, I guess. So what's your thoughts on that and what's been kind of going on there?
Yeah, I mean, we had a return of what was called a US exceptionalism over the month, but also we had strong US corporate earnings data. We had US economic data, I think, that was suspiciously strong throughout the month, and we think that will tend to dissipate over the balance of the year. And also we had, the certainty on tariffs for most of the major trading competitors of the US, and they weren't quite as bad as been feared initially.
Yeah, but I guess, we have seen a really strong run-up in markets, and things are never kind of as good as markets often hope they are. They're never as bad as they fear they are as well. But clearly it can't all be good news out there. So, what are the kind of risks on the horizon and things that you're thinking about in terms of the concerns out there?
Yeah, I mean, I think one of the key ones centres around the US Federal Reserve. The Fed was probably too slow to hike rates in 2021, and the risk is that Jerome Powell digs his heels in under criticism from the White House and particularly Donald Trump. So they're too slow to ease. That's certainly one. I think another one centres around the fiscal deficit and whether the bond market takes fright. And I think finally it centres around US valuations, which are 50% higher than for the rest of the world. So really priced to perfection.
And I think as we think about constructing portfolios against that backdrop, balance, diversification and flexibility are kind of all key. So I think we've seen a period where equity returns have driven strong returns for the portfolios, and I think medium term we still do see a positive outlook. But volatility will still be around in markets, and we think that there will be periods where some of our shorter dated government bonds do some of the heavy lifting.